Personally am so excited for this next panel on social trading. I think this is super relevant to our time now, especially everything that's happened in the past 12 months. It's been a long year. It's hard to believe that the Wall Street bet saga and all these things that happened with copy trading and social trading panels that really turned the world upside down was less than a year ago. And since then, there have been quite a few changes in the market, so I'm really eager to discuss that with this fantastic group. My name is Rachel McIntosh, and I'm a podcast host and content creator at Ultimate Fintech. I'm going to be moderating this panel. And along with me, I've got Mike Reed, who is the director of Pelican Exchange. I've also got Benjamin Bilski, the founder and CEO of Naga. We have Dare Ferguson, the CEO of Ava Trade. And last but not least, we have Ibtihaj Bashar, the regional head of partnership at Alpari. So please help me in welcoming these panelists to the stage. So first things first, guys, I'd love to know a little bit more specifically about yourself and the work that you do. So we'll start at the end with Ben. Who are you and what do you do? Oh, is your microphone on? So technical difficulties. There we go.
Sorry, not my strength. Yeah, my name is Ben, the founder and CEO of Naga. About myself, e-commerce background from back in the days, and I realized when I was doing an online shop actually for fishing equipment, which is very far from finance.
Quite different, yeah.
Yeah, very different. But you know, the nice thing was back then that everyone wanted everything very quick and easy and simple if they want to buy something online. And I think e-commerce was like this teach the people how to purchase things online. And when I saw the world of investing and trading in 2014, I realized how complex it is to just trade stocks, for example, or to invest, because every time I would open a screen, there was like a big chart and I didn't understand anything. Somebody would call me and I was like, okay, I just want to do something. And it was so difficult, right? So this was kind of the motivation for me to start Naga. It started actually as a Tinder app clone, you know, the Tinder app for the dating. I chose the UI and I allowed people to swipe for signals left and right. Okay, so you could say, I like a trading signal or I dislike a trading signal. If you like it, you copy it. And if you dislike it, you just don't see it anymore. So this was kind of the idea already of social trading in a way, where the people would, you know, advise other people in a way. So this is basically background. We scaled the company now close to 400 employees, publicly listed on the German stock exchange, valued around 300 million, revenue close to 60 million last year. So in the end, yeah, we do know now a lot about social trading. We have 1 million registered accounts. And my background is really e-commerce into fintech, into social trading and making things a bit better for the users in terms of understanding how to benefit from others' knowledge. And I think we managed that quite well at Naga.
Thank you so much, Ben.
Yeah, good afternoon, everybody. My name is Dara Ferguson. I am the CEO of Ava Trade. We are one of the oldest brokers probably in the industry, or we've been around since 2006. And I've been with the company myself for 13, almost 14 years. So I'm somewhat, I guess, of a veteran. You're a newbie, and I'm a veteran of some sort. Ava Trade, we're one of the most regulated companies in the industry. We have 9, almost 10 licenses around the world in multiple jurisdictions. And one of the things that we are now looking at as well is copy trading and looking to roll out that as part of our offering. And I think one of the very important aspects that we're going to talk about that is on regulation and the intense scrutiny that is coming down the line, but that all brokers need to be ready for.
Thank you. Ibtihaj.
Hello, everyone. My name is Ibtihaj Bashar. And a little bit of my background, I'm from Sudan. I brought up in Saudi Arabia. And I've been working since 2012 in Kuala Lumpur, Malaysia. I am the head of partnership at Albari. I just joined Albari actually this month. Albari is one of the oldest brokers. It's almost 24 years since they were established. And thank you for having me. I'm looking forward to this discussion.
Thank you.
Hi there. My name's Mike Reed. I'm the founder and one of the directors of a company called Pelican. We specialize in providing B2B solutions for broking platforms to provide a social or copy trading solution. So we provide the technology, and it's fully white labeled, so brokers therefore have their own clip-on social system. The additional element that we provide is also regulation. That's a key part. Obviously, a lot of our broker partners look at the world and they see all the growth markets in Asia, in Africa, in Latin America. But a lot of it all comes out of Europe, and in Europe it's heavily regulated. And we were the first ever social platform to be regulated by the FCA. And I think still to this day there's only about 3 of us out there. I know some of the big platforms we've all heard of, like eToro. I think they've tried to get regulated in the UK recently. I'm not quite sure how successful that's been. Been complications with it with Brexit. But essentially, what we do is we come in as sort of a turnkey solution. We work with the brand, so we defend the brand. So obviously the broker provides their own copy trading solution with our technology and our regulation. And we've been successful enough recently to work with some of the biggest brokers in the world, Ava, Vantage, Influx, Axie. There's quite a few out there. And it's been a real kind of explosion in the industry, and we've been lucky enough to be positioned pretty well in the last couple of years.
Great. Welcome, all of you. So my first question, I'd like to ask just sort of a broad, big question to kick off the discussion, which is thinking back to a year ago, in the last 12 months, what has happened? If you can pick one thing that's really surprised you, what would that be?
I think the thing that really shook the industry was actually what happened with eToro. I think there was a reverse into a SPAC, which is a special purpose vehicle in America, and the valuation was allegedly meant to be 11 billion. That suddenly put what was a specialist copy trading social system, in effect, the most valuable company or most valuable broker there was globally. So what was seen as some sort of startup with a nice-to-have system, yes, I think crypto really encouraged that valuation, but suddenly brokers all around the world were like, whoa, what's happening here? There's this enormous valuation, and these clever private equity houses and VCs that have given it that valuation have looked at the numbers, and they've seen that it's worth it. Now, what that's meant is that copy trading now is not just a nice-to-have ancillary function; it's actually a necessity. And if you're pushing into these new regions, it's actually like charting; it's a necessity. You need to have copy trading too. So I think the eToro's valuation was an absolute game changer.
Thank you, Mike. Who's next?
Okay. So if one thing I would choose, I would say, of course, the rise of NFTs and how actually escalated so fast. In 1 year, we have a 40 billion industry came to life. As we are excited about NFTs and the metaverse and the Web3, the moving to Web 3.0, I think that's the one thing that stand out to me in the past 12 months.
Yes. Thank you.
We touched on it yesterday briefly on another panel we were talking about, and one of the major shifts in the marketplace in the last 12, 18 months is the power has come to the people. Whereas we looked at the Wall Street bets and we saw what happened with Reddit, etc. And the power dynamic has shifted away from hedge funds, and it's gone to individuals and groups of individuals who are now shaping how markets move, how instruments move, which drives charts. And then that all feeds into the copy trading revolution which has come. We work with a number of different partners in our social trading offering. One is Jubilee We also work with the likes of Mike in Pelican to expand out that kind of what you need to going into the market into the future. And I think it is going to shape, and eToro is a good example of how that's a leading broker into the future. It is going to it's going to get shaped by regulation, because what happened with the Reddit and these type of movements, it spooked the regulators, and they don't know how to deal with it and they don't know how to monitor it, but they are going to try and come down on top of it. But I think for brokers, you want to embrace the regulation that's coming, and there is going to be more intense scrutiny on copy trading, how leaders are compensated, how people follow it, how people register and sign up to it. So affiliation is a big part of that market as well. But I think for brokers, you have to embrace the regulation aspect of it, because that will shape you going into the future.
I think Des got a good point there, actually. What happened with Reddit and GameStop at the beginning of the year, suddenly everyone thought, well, execution-only trading, not just CFDs or FX, but actually share dealing on Robinhood, suddenly changed the power shift slightly away from your typical hedge funds who can try and dictate how it works. And then suddenly it was just people on social systems all around the world gathering together and backing what is actually a restricted stock. And it basically catapulted this company to this huge valuation, but it certainly made people sit up and go, whoa, okay, what's happening here? Okay, there's a power in the people, and if you can harness it correctly, you're going to get the kind of volumes that you typically would get with the institutions. So if you can try and cleverly enhance that on your platform, then it's interesting for brokers.
Yep. What are your thoughts about that, Ben?
Yeah, I definitely second that the power of the people or the power of the community and the awareness of people that they can make money online, not only via selling items, but also trading and stock trading. I mean, the acceptance is much higher and people talk much more about stocks and crypto. And I think crypto was the icebreaker when it comes to mass adoption, when it comes to investing. Because if I look I'm more like, I'm the youngster in the industry, but when I started in 15 or 14, it was still not the case that I would be talking with colleagues about what I'm trading. And now, you just go to WhatsApp, you chat with your friends, and everyone's trading something. And it's a common thing suddenly. And the rise of the community and influencers, and I think this is where we also focus a lot. We don't focus so much anymore on the demand in terms of, I know that people want to find the next gem, they want to find the next big trade. The demand is by default there because people by default are greedy, yeah, and they're lazy, so they want to make money without much effort. So the demand is there, but I think what is the most important, and we've seen it as well, is how much you need to trigger influencers and the supply of social trading. That's why I call it supply. People providing ideas, people being the good traders, and I think what really surprised me positively that there are so many rising influencers and stars. And now it's not even a term influencer, it's a term finfluencer. And I haven't heard that before 2 years ago. I've just started to hear this last 12 months that there are finfluencers. Even Bloomberg or Business Insider, etc., they are even titling that in headlines. And the second thing, which also is related to community, is DeFi, decentralized finance. Decentralized finance is completely originating from people want to take power of their own finances. Web3 gives them, of course, the infrastructure for that. But again, it's driven by people and community owning the whole thing. And we saw it with the Wall Street bets with Reddit, where people want to, also own the market. And now people don't want to only own the market, they want to own the entire liquidity, they want to own the entire exchange, they want to own the entire process. And I think this in combination shows how much people are more aware what they can do with their money. And people or companies like us providing social trading are benefiting big time. I mean, also our valuation went up in the last 18 months by 8 times. And this was also mainly driven by what we're doing in terms of social trading and social investing.
So I'm hearing a couple common themes here. Of course, this idea of power to the people, and also the fact that DeFi and NFTs and Web3 have come up, and that's sort of a conduit for this power to the people. And Mike, you brought up a really good point as well, which is that that if you have the ability to harness and channel the power that the people have now onto your platform, you're going to be in a really good position. So we're off script here a little bit, but I'd like to know from all of you, how is social trading instrumental in that process?
I mean, it's interesting. So in FX markets, obviously they're seismic, they're enormous. So trying to influence an FX market just won't happen. But what you're now seeing is certainly with MT5, and they've introduced a whole series of symbol sets which go on as far as you want to go. That then becomes much more of a main thread. And so, yes, if you're auto-copying someone or a good signal who's an expert in cable, for example, it's unlikely that you'll have any influence on what goes on, or they will, unless they're off the scale big, or not even that possible. But suddenly with the MT5 intervention, and lots of brokers now moving to MT5, the symbol sets have extended into US stocks. Now, that means that actually a copy trader can have an influence if they picked a smaller stock like Game Group that the broker was providing. So in terms of the FX pairs, no. But in terms of the symbol sets that we're seeing now, it's quite possible, and the broker's got to keep their eyes on that. Typically, when we work with a broker, they will say, look, have you got a big signal on the system that's now going to affect what we do? And they will have to pump up the liquidity on a particular market if they've got thousands of followers. But that becomes much more of a headache if you suddenly have MT5 and you're offering a whole load of other stocks too, and smaller stocks. So you are going to see actually these signals, these influencers who specialize in these US stocks or micro stocks, they will start to have an influence on the markets, and the brokers are going to have a bit of a headache, like there was with Robinhood and Game Group. I mean, Robinhood got themselves in a massive pickle, and it looked like they actually had to back down to the hedge funds and the regulators in the end. So they actually lost the power of the people a little bit in that battle, and they lost a bit of confidence. But certainly you've got to be prepared for that if you're going to offer smaller stocks to their system.
I think two of the biggest things that social trading has brought to the industry is transparency and choice. There's no hiding from the online platforms that are out there. Once you're up and you're trading, you're live to everybody to see. You can't sit in a corner and cover your losses or shut them down. Whatever you're doing, people are seeing in real time, and they're making decisions to follow different people, different leaders, different instruments, from 1 second to the next. And as a consumer, as a end user, you can go and search for every multiple asset you can think of. You can look at different strategies, and you can find people who are offering whatever you want to. So if it's FX, if it's crypto, if it's stocks, whatever the asset is that you're looking for, you can go and find that. If there's a particular type of trading that you like, if it's short-term, in and out, if it's daytime, if it's arbitrage, there are so many different ones that you go and look for. So again, it does come back, and it sounds like weird when you keep on saying power to the people, but it is that choice that you have, because it is so widespread. And I think even when you, like in the platforms we offer, and again, Jubilee Trade is one of the leading ones in the industry at the minute, we're constantly looking at refining how we present those strategies to the end users, because you want to present the very best ones. You want clients to be able to ultimately benefit, because they will bring more clients with them, which is going to benefit the broker at the end of the day.
Ibtihash, do you have any thoughts on this as well?
I heard both of them talking about social trading and copy trading. They're similar, but it's different in the technicality. So social trading is when you bring traders who wants to gain out of their knowledge and trading, and investor who are interested in the market, but they don't have the knowledge. Maybe they don't have the time to trade. And here, our role as a broker is to kind of like attract the talent, make sure that they performs and keep trading, because they are the core of the app itself. Because when you have good traders with good strategies and they keep trading, that will guarantee that you have investors come into your app and they keep in investing. And this is what everyone is interested on, I would say. More than copy trade, you still need to know the basics, knowledge of how to trade and how to copy and how to go to the platform, whereby social trading take all this hassle away, and you just need to know who's trading, what they trade, and you just copy and you stop copying without any limitations. Yeah, I just wanted to point out this.
Yeah, I think that's a really important distinction. I kind of saw you nodding along. Ben, do you have any thoughts on that as well?
Yeah, for sure. I mean, once more, I will underline that social trading and copy trading, I agree. Copy trading is more the mechanism. Social trading is more the overall concept. It helps so much to educate people, definitely to get into the market. So it is essential for the industry to participate, for sure, and have these solutions. What I will always stress out, I believe that most of the influencers and top traders, if you really want to be successful as a platform, you need to focus that they can make money, not only from their trades, but also from being rewarded sharing their knowledge. And I think this is all together, because if we look at the wider influencer industry, look at fashion industry, right? You have fashion influencers. They're getting paid for posts, for content. You have food influencers, you have like sports, gym. There's so many influencers, and this thing is so important for so many brands. And it arrived in finance so much, but most of the platforms, they focus on just providing some signals and some copy trading. What you really need to do, and that's what we solved, you need to give the influencers of these days an experience that they think that they are on Instagram or Facebook or Twitter. They need to have a feed. They need to be able to put emotions, GIFs, photos, videos. It's not only the trade that is the content, it's the whole analysis and the whole mood and the sentiment around it, how the trade has been created. And you need to copy the user interface and user experience from the big social media apps, because they have created the concept of social media and they have actually influenced social trading so much. And I think this is what eToro did very well. And we are very similar in terms of user interface as well. So this is a big part. And secondly, what I believe, and what we have to be very careful, all of us here, I believe that we can be replaced by smart contracts, our concepts, if we don't move with the market. Because if you look at decentralized exchanges at the moment, you could potentially write a smart contract that will be just mirroring any other address that is active on any other exchange. So you don't need a platform anymore. You don't need anyone in between. You just have a smart contract platform basically and say, okay, I have my Ethereum address or Bitcoin address, and I would just be following someone who's investing with that Ethereum address on some decentralized exchange. And I am afraid, like sitting here, that 99% of the industry will miss out on this trend, and they will be focusing only on their centralized approach. So we are moving already into Web3 as well with NagaX, it's our crypto platform, where we'll be allowing also address-to-address copy. And this is something that, on a regulatory standpoint, is very interesting, by the way, because how to regulate the copy and token address, yeah, and source of funds and AML, it's very wild. But that's why I said in the beginning, DeFi, the space is growing faster than I've ever seen before, and I think social trading will be a part of it as well.
There's so many important points that you guys raised. You know, I'm hearing NFTs, social trading, this idea of finfluencers, DeFi, all of these things, and how they're kind of playing a role in developing this space. So what I'd like to ask you about is new traders, and in particular, millennial and Gen Z traders, you know, who are this big group of people that are coming up. And as you said, we're saying, Ben, you know, that are sort of posting and having these public dialogues about their trading experiences with, you know, posting emojis and that sort of thing. What are you doing to all of you, you know, your companies to market to these new traders, and what's important in terms of educating them and making sure that they're safe on your platforms? And Mike, we can start with you.
Yeah, it's a really good question, because the big growth profile happening now is obviously the new entrants to the market, and that is, as Benjamin mentioned, it's about the influencers, it's about social media. So what happens when they come in, it's not just the Gen Z guys coming in or girls coming in, it's actually anyone from anywhere around the world. And you know, it's been a really successful time for brokers at the moment, pushing into Asia, Africa, Latin America, certainly European brokers pushing out there. So you're getting a massive influx of people coming in. And a lot of these people they're very specific. They want speed of return. So they've seen it on social media, they've seen someone with a fast car, whether rightly or wrongly that person's won it or made it or whatever he's done with it, they think they can do it through trading. So they want a fast return. Secondly, typically they don't have a pension structure with them. So they're not old school, they don't work in a big company with a pension. So they actually look at this as an investment concept, which we all know is high risk. There are some amazing traders, but there are also some terrible traders out there. They don't necessarily have the appetite to teach themselves. So they're not proprietary traders. They're not looking to actually go and do a year's worth of YouTube analysis to work out what they want to do. So they're in there to look specifically for copy trading, for a signal that will make them money. They are actually quite sensible. So and they are looking to actually try and protect their wealth. But it's kind of the copy trading and social trading platform's responsibility to try and teach them or to try and nurture them away from that 4,000% return, because that just doesn't really happen. And it may have been someone who's put on a trade, left it there accidentally with $40 in their account and it's exploded. But essentially, it's really our responsibility to try and say that is not the right person to be copying. You've got to understand that if you are, it's not fast cash. You can make super abnormal returns. That is possible. So they are in the right place compared to almost everything else, apart from weird crypto coins that come up every so often. But that's also quite difficult. So you've got to try and educate them that you want to look for a lower risk profile. And with that, you're looking for, an amazing trader might do 5%, 10% consistently a month. That is extraordinary if you can find someone who does that consistently for a year. So if you find that, that's gold dust. But you've got to teach them that those are the people you're looking for with very limited drawdown. So they come in, they're looking for that fast return. But you've got to try and teach them by not saying, don't follow that person with 4,000%, because you're going to blow up and it's actually in no one's interest. The brokers, the social system, the clients, the signal's interest to do that. And if they have a good time, we measure a social system on something called a coefficient variance. And that means if someone invites somebody else, you have a good coefficient variance. So Facebook at its peak had about 0.7. That means 70% of people were inviting people to Facebook, which is why it exploded. So we measure the success of a social system on that particular variable as well as retention. So if someone has a good experience and they don't blow up, guess what? That coefficient variance goes up because they're going to recommend it to their brother, their sister, their family. And that just means that you've basically acquired someone almost for free. So, getting an off-the-shelf platform and then not managing it and looking after your clients will come back to bite you. You might get a quick access to their account, but guess what? You're not getting, in effect, the iceberg behind that could have been looking after that client really well.
Yeah. Ibtihaj, do you have any thoughts on this as well?
Okay, when it comes to social trading and trading, again, I would say what's more important when it comes to advertising to Gen Z and Millennium, it's not just the app itself, but you have to zoom out and look at your marketing and branding as well. There is a science called how to market to Gen Z and millennials, and how to study their behavior, because they are influencing the customer behaviors in our time and for 4 to 5 years to come. So the idea behind what's your brand about, what kind of value you bring, it's very important. How sophisticated is your application? It's very important. How can they connect inside the app itself? It's very important, because right now to succeed actually, you need to understand the community behind the product that you are offering. Understanding millennials and Gen Z, it's important, and we can actually learn from the gaming industry. 80% of Gen Z are there. Over 70% of millennials are there. Actually, or even Gen X or Generation X, 80% are already there. So what we understand is we have to have a very interesting, have that fun element into our product in order to have like a mass community who are like using it. Yes.
Yeah.
I think one of the things that the challenges we have as brokers is education. For the millennials and Gen Z, they want everything and they want it now. But trading is difficult. Copy trading is trying to take that difficulty away. But nonetheless, what we're trying to do is encourage not just copy traders, but also leaders. And what social trading and copy trading is allowing clients to do is to come in, learn, but learn in order to progress, because you don't want your user just to come in and sit and follow people all day long. You want them to come in and you want to give them the tools to analyze what they're actually doing. It comes back again to choice. It's to go and be able to take the opportunity and look exactly what the leaders are doing, to understand what they're doing and how they're doing it, and then to evolve yourself as a trader. So we do want the new users to become the future leaders, if we'll call it that way, which will bring more people in. Then it comes into what you talked about on influencers. How does that evolve from being a copier, from a learner to a copier to a leader and then to an influencer? And it is a progress that, as a broker, you need to bring your client base through, because it's the influencers that are going to shape the future of the industry as well. They're going to shape how we bring and target new clients coming into it. It's also then, and comes back again to regulation, is how are we going to protect those influencers under stricter regulations in the future? And that's a challenge that it's going to be very difficult to do. Marketing is very difficult to monitor in the current environment. And the social influencers are, again, something that regulators don't know how to deal with, but they're trying to deal with it. So as a broker, we're going to need to be able to protect them in the future.
Yeah, and to add on this, I fully agree. What is also extremely important, and what we learned, is you have to not only educate. I mean, education is a big topic, right, in financial markets. Before education there's technical analysis, there's fundamental analysis, and now what we've learned is also there's leader and top trader analysis, which is so interesting. And what we tried out in the past, let's say 12 to 18 months, we tried to educate our users, on the new users, on social trading, creating YouTube videos, analyzing the leaders, giving them the stage. So we have our community manager and our head of marketing. She's basically doing a YouTube video, a very engaging one, explaining how this trader acted and what he was trading and what the statistics say and the frequency of trading. So in a way, trying to educate the newbies and the millennials in a way that they are used to consume content. Because if you look at the current structure of the minds of Gen Z and millennials, their attention span is super short. Yeah? So they have 15 to 30 seconds max. TikTok videos, when you are longer than 30 seconds, they drop like crazy, which is insane. So people don't want to read anything anymore. They don't want to even watch a photo. They need a video with big text on it, so they don't have to play it with sound because they are listening to music. These kind of things you need to all kind of acknowledge that this is the user behavior, right? So you need to try to educate, of course, your users, but the form of education and content, how you serve those users, needs to be aligned with the times we're living in. And this helped us so much when we just looked at it and said, like, yes, we want to tell them copy trading, social trading is the concept where you follow people, but what does it mean? What does it really mean for you? How does it work? And put it in a 15-second video. That's the massive challenge. Or 30 seconds. Or a YouTube analysis. Funnily enough, if you have a 10, 15 minutes deep dive video, people also will watch it if it's engaging. So I think that's also a core of us as platforms to go with the trend of how people consume education content too.
Yeah, it's so funny, to hear you say that you got to take these super complex concepts and boil them down into these 15-second videos with music in the background. I'm not going to say that I'm not on TikTok. I am, so I guess I fall into that category as well. But I wonder, when it comes to developing like these influencers, and as you were saying, Der, that there is a regulatory concern also for these people. If you're bringing them through the journey and you're incentivizing them to become leaders and influencers, and traders on the platform that other people copy, like, what does that process of building those protections look like for them in a regulatory sense?
I mean, I guess we don't know at the minute, and it is something that we know is coming down the line. Yeah. I mean, the days of putting the flashy, Ferrari and, here's my Gucci bag on an influencer is not going to be the way of the future. And it is going to be more akin to what Ben is talking about, is I'm an influencer and this is my 30-second video of how and what I do to trade and why it's successful. But you can't, and that's what regulators are going to look at. They're going to look at these guys who are, throwing these crazy things up, make $1 million in a minute. But you can't do that. And it comes back to my previous point. Trading is hard and it is difficult. And the best hedge funds in the world, if they make 10% a year, they're very happy with the returns. So if you come in and you think copy trading or standard trading, and I can make 10% in a week, you're doing pretty well if you do that. But it is something that you have to analyze, and you have to, as I said, appreciate the work that goes into the background behind it. So when leaders are becoming influencers, they have to also, and brokers will have to help them learn how to navigate through the regulatory aspect of it, because they're not looking at regulators. They're not looking at, all they're doing is, how do I get more followers behind me as soon as possible, and at the same time, be a revenue generating trader. And that's a very tricky dynamic to try to have to navigate as a new trader, let alone even old traders as well. So I think that's where regulation is going to shape it. But brokers are going to play a major part in how we monitor that as well.
Right. Ibtihaj, do you have any additional thoughts on regulation in this regard?
When it comes to regulation, we just need to understand what kind of regulation you have and where you operate. Sometimes it's positive, as if the traders are, let's say, enjoying swap-free, and there's a client in a country that swap-free is not available, they can enjoy that. But at the same time, if, let's say, you're taking a client from Europe, then they should not be copying a client who are using high leverage. So those are the main, like I would say, red lines that need to be taken into consideration. Other than that, it follows exactly everything's like KYC should be there. The AML also should be there. So yeah, it's quite simple. There's some red lines you need to not to cross, otherwise you'll be finalized.
It is, I would say, a really complicated space right now. So you've got an influencer can make so much money from a broker through just literally introducing. And influencers are so influential in doing exactly that. If you get a good influencer, I mean, we launched one with a broker client of ours. So they launched with an influencer, and they were doing 1,000 downloads a day for the first month. You know, that's extraordinary numbers, just because it was promoted by one specific influencer. So to harness that ability is for a broker, it's really tempting. But if you are subject to the regulations, like any European-based broker, then they've just got to work out how to navigate it. There's a really interesting conundrum going on with us specifically at the moment because we're FCA regulated. The FCA don't like the world of influencing. Obviously, they measure things by complaints. So the more complaints they get, the more they are going to investigate what's going on. So they're looking at, and what happened in the lockdown period is everyone was sitting at home doing nothing. So a lot of people had idle hands, saw people showing off their jacuzzis, their Ferraris, their Lamborghinis, and put lots of money into, copy trading, social trading, any kind of trading from the influencers. And that then led to people really just losing a lot of money, and then obviously led to a massive spike in complaints to the FCA. So the FCA then literally, I mean, they are a very good regulatory body. We have a lot of respect for them. But then that swung their beam of attention onto, okay, who are these influencers? Where they come from? Should the brokers be dealing with them? And how are they dealing with them? There's another layer of complexity behind that is if you have a social or copy trading license in Europe, you actually are exempt from the rules that prohibit you from facing that unregulated entity. So it's really complicated, but everyone's slightly torn because they're so good at what they do. They can make huge amounts of money, but they can also bring the wrong people in. So the regulators are getting a bit hot under the collar about it. The brokers are going, they're so good, but they're just not quite sure how to deal with them. If you go outside Europe, then you're looking at sort of Africa, etc. You're seeing that obviously there, it's really influencer-led. There aren't the regulations there, but it would still be the obligation of the broker to try and just be careful with these people that are coming in who are possibly not the right people for this, or are putting money in which they don't actually have or shouldn't be risking. So there's a sort of self-reflecting responsibility the broker should really have as well.
Right, definitely. And in general, I just wanted to say, that I think so. In this industry, there's sort of a tendency toward, looking down on these new kinds of traders, like young people and people who are new to the space, and these retail traders who, participated in Wall Street bets, that they're uneducated, they're unexperienced, that they're dangerous even to the market, and that we should leave trading in the hands of the people who know and understand it the best. But I think social trading and copy trading is a way to welcome these people into the space, to as we're coming back to to give the power to the people, to the individual, to give them ways to grow their wealth. We're running out of time, but there's one more topic that I want to touch on before we take a couple questions from the audience, which is the role of things like artificial intelligence, machine learning, these kind of tools that are helping traders, trade more effectively, but also with things like marketing, education, et cetera. How are you seeing AI and machine learning implemented effectively on social trading and copy trading platforms? And Ben, I'll shoot this to you.
Yeah, it's a good question. I believe, I mean, we were talking about it as well internally about how to automate processes, how to make things smarter. But what I realized a bit is that people buy people. That's one thing, especially in social trading. And people don't buy bots, and people don't buy systems so much anymore. Okay, so in a way, I think that people want to see that somebody real behind. Of course, you can enhance strategies with AI. I'm not looking at this at all, personally. I will definitely always focus with our platform to create enough transparency to know, okay, there's a real person behind it, and this person is doing what this person should or wants to do in terms of if this trader uses some, I don't know, enhanced way of identifying something on the market sentiment or, you know, how to trade better and talks about it, great. But I will not do the job for the traders and is replacing them with bot-like systems or ideas, because I don't think that this is the space, it's my opinion, for this, and you should be focusing really on the peer-to-peer approach. In marketing, of course, and in process optimization in terms of, you know, how you run your platform, how you support the clients. Of course, AI is a huge topic, but if I just look now clearly segmented on social trading, how I can apply AI, in our case, we don't look at it.
Definitely.
Yeah, I mean, it's a good point. I mean, there's been EAs since time began, and the best signals we see are kind of like hybrids. They're like an EA that's spotted by human intervention, and that sort of seems to work quite well. They'll take out the EA, you know, when non-farm payroll or Christmas time, when they think it might behave differently. But in terms of ourselves, we have something called a suitability assessment, and that means you're assessing the risk profile of the person when they come in. That's an obligation under the regulatory regime that we operate in and the different areas, but you can extend that out to you know, everywhere. Whereas if you start to learn what that user is interested in, what risk profile they've got, and then you can custom what you then show them, those strategies or those signals that are interesting to them. You know, if it's someone with a very high risk tolerance that comes in and goes, and then they blow up very quickly, they're not going to be as angry because guess what? Hey, they ticked all those boxes. But if you've got someone who's a salary sensible, who's come in and goes, actually, I'm looking for, you know, sensible returns, sensible drawdowns, and you give them what they want, guess what? They'll stay on forever. So what we do is we listen to the behavior, we assess them as they come in, and then we adjust what signals we show them. So that's not just a regulatory con, but actually it's just really useful for customer retention. How clever is it? It's quite clever, not quite AI, I don't think, but it's definitely listens to what they're doing and it will adjust accordingly. And that's about as far as we've gone.
Yeah, I think it's a tricky one because there's two sides to it. On one aspect, the AI trading or EAs or whatever way you want to call them, it takes emotion out of trading, which we as human beings are terrible at when it comes to trading. And we see it so often where you make a trade, and if that trade goes against you, and if anybody that's traded out there, when it goes negative, you sit and you watch it. And you watch it and it goes -10, and you go, it's going to close it, and then it's -20, and you're sitting, it'll come back. And the next thing, it's gone, and you lost your money, and then you're right back to the start, which is what happens everybody that comes in the very first time. On the flip side, as soon as it goes positive by $10, even though you wanted to make 100, you close it. So where that's human part of it in trading, and again, you see it as a broker, you see what your end users do. So we analyze how our traders trade themselves, and then we're trying to push that back into people, and it comes back to education. You're trying to push it back into the end user to say, you have to take the emotion out of it, and this is why people then develop their EAs based on their own trading. So I think there is a place for it in the social trading world. It's slightly off topic, but we saw our users doing this, and we built a tool. It's called Ava Protect, and it's basically when you start trading, you build an insurance product behind it. It works off an option in the back end. The client doesn't need to know it, but it allows a client to learn to take that part of it out. So when the trade goes against them, the fact that they've, you know, if anybody's ever played 21 in a casino, it's like, you know, you put if the dealer is showing 21, do you want the insurance or not? Nobody does it. And if anybody's been in a casino, you go, no, I'm not going to do it. It's a waste of money. And then the dealer turns over 21, you go, shit, why didn't I do it? But it's the same in trading. So we created this product where essentially you have that button to click that I can cover myself if my trade goes against me. And it takes the emotion out of it then. So you can buy it for a day or 2 days or 3 days, it's a simple premium. But then that allows it to, if the trade goes against you, your insurance kicks in and you get your money back. If the trade goes the way you want to, you can sit and let it and you're not running to close it out. So I think there's an element of AI, and that's also, we have robots who are starting to develop and use this tool. And we also have copy traders who are doing the exact same thing. So leaders who are using this Ava Protect system we have, so they can allow their own followers to, if the trade goes against them, it kicks back in and it keeps their own results on a positive way and then protects all the followers come behind. So I think there's an element to allow both of them work in the industry together.
Definitely. We have time for one or maybe two quick questions from the audience, if there are any. Aha, thank you.
Is it on? Oh. You all mentioned, giving power to people and how social trading and copy trading gives power to people. But obviously, it's not a secret that majority of retail traders lose money. Regulated brokers are required to, display this information, and we know that 75%, 80% of retail traders lose money. And the proportion of their losses are actually much larger than their wins as well. So my question is then, how does copy trading actually give power to people, or just another way for them to lose money?
Good question.
Yeah, it's a really good question. If you've got a copy trading solution and you partner with a broker, you clip it onto the side, the broker's got to take that into consideration because they're running lots of different revenue models, B-book, A-book, different versions of A and B-book. So they've got to look at, okay, is the flow A-book flow? Because guess what? They're going to copy someone that's really good. Or is it all actually ultimately still B-book flow and we're all going to get that money eventually at some point? And so what we're seeing, and we sort of went in not really knowing the answer with a lot of our brokers, just waiting for them to respond, fingers crossed that we weren't going to influence their revenue in a negative way, because obviously B-book flow is significantly better than and it kind of puts you at odds. If we start to do a rev share on a B-book side and we're producing a copy trading system, that's completely a conflict. We're saying, come over here and you're going to make more money, but hey, we're going to make money from the B-book because that ultimately means you're going to lose. So there's a bit of a conflict there, but certainly what we've seen with the broker partners that we've worked with is they've actually just adjusted their model and they don't mind the fact that it's more A-book flow. And the A-book flow is essentially we give them some kind of control, limited control, about toxic signals, the ones that they don't want, so we can stop those. But essentially, they are still seeing these systems, these social systems, being a net positive in terms of much more people coming in, much more new people coming in, and trading in line with a professional trader. And so that upside is really, if you go to someone and give them an account and say, off you go and trade, scratch their heads and work out what to do. If they're connected to a professional trader or an EA, the volume of trades is significantly higher. So that's what makes up for essentially what they were getting on the B-book, well, to a degree. But certainly we have seen from our broker partners that they're quite happy with the kind of flow they're getting, and it has been value enhancing. And actually, I was speaking to one just yesterday, and they've had to readjust their declared number from 95%, as a Middle Eastern broker, all the way down to 63 since we partnered with it. And we're not taking any credit for it, but there was some good signals that their client base got exposure to, so it has brought it down. But it's definitely something a broker's got to go in with their eyes open about how they manage their revenue model.
Great. One more quick question, if there's one. Okay. Ladies and gentlemen, thank you so much for joining us for this panel. Let's give a warm round of applause to our panelists. Thanks, guys.